Friday the 16th of August. I just want to run through my trade ideas for today for my subscribers because it's been a little bit confusing lately. On my Forex trades, I'm focused on the yen pairs. We managed to pick the low for those steep moves in the yen pairs when the yen rocketed higher over the past few weeks. Now, it's been a slow recovery and this confused me. So, for example, this is the pound versus the yen. We had a long period of consolidation for, I'd say, about 4 or 5 days, and the volatility was decreasing. So I was starting to wonder whether the resistance levels that I had from my Fibonacci levels and my short-term moving averages was going to cause prices to reverse and see the yen strengthen again. Well, that wasn't the case. So yesterday, my strategy was to sell at the resistance levels for the yen pairs, New Zealand dollar yen, euro yen, CAD yen, Aussie yen, GBP yen. That was fine. I don't regret doing that. We had to see if those resistance levels would hold, bearing in mind the pattern and the decreasing volatility. I thought there was a chance we could turn around and go down. We had pretty tight stops, and the backup plan was buying a break above the resistance levels. So that has worked quite well. I don't regret trying the short positions for a small loss, and then that set us up for buying on the breakouts, and we've had good breakouts. So as you can see, pound versus the yen's had a good breakout. I think there's further to go on that one. Aussie yen has had a good breakout. You see this nice big green candle as we finally burst through those highs and the resistance levels around the 97.60 area. Again, we're pausing now at the green 100-hour moving average. I think we can get through there eventually, and obviously a break above that sort of 99.00, 99.10 area will be a buy signal for today for the Aussie yen. Canadian dollar versus Japanese yen also beat my resistance levels for a buy signal. Nice big green candle on that buy signal. You had to really have a stock to enter orders in your order book in order to catch these. When I give you the signals, buy a break above 89.70, you could put an order in at 89.70, 89.75 to buy when the market hits that level. It's called a buy stop to enter order. I'm sure most of you are doing that. Then you've got your targets. So my target for the Canadian dollar versus Japanese yen is 109.00 and 110.00. We're about halfway there. Yesterday we got to 108.79, so we got pretty close to the first target, and I think we will continue higher. The next market I want to look at is the euro yen. Again, nice big green candle as we broke up through the resistance areas. You'll see I've been putting my fib levels on here on the downside to figure out where I will buy if the market comes back down. So I've got buy levels on my sheet today, lower prices if we come back to retest the break point. And in case you're not long already, you can buy down there or you can add to longs. I don't actually think we're going to get there, but it's worth putting the levels on the sheet just in case we do. I've also got buy levels on a break above resistance. So for example, we've got the green 500-hour moving average here in the euro yen. If we start breaking above it, I've got that as another buy signal for today. So I'm trying to cover whether we retreat to support levels or whether we break above resistance. Either way, we should be getting into long positions. As you can see here again, 500-hour moving average on the chart for the New Zealand dollar versus Japanese yen. So if we start breaking above 89.80, I'll take that as a buy signal. We're going to finish up with the stock markets because we're hitting some important levels there too. Yesterday, 54.90 area was a really strong resistance level, but the US markets have only been pausing at my resistance levels, and our shorts have not been offered any profit really. So although the resistance levels have worked for quite a long period of time, for example, this one around here, it didn't offer us any profit on the shorts. So we then bought on a break above resistance levels, and we did that yesterday, which worked really well because as soon as we broke the resistance, we roared. So that trade worked. I had us buying on a break above 55.10, which looks like just the right level because we then shot up to 55.79, and one of my targets was 55.80, so we only missed it by a point. So I'm quite happy with that. Now, the Nasdaq is hitting resistance around the 19,600 area. It's a 61.8% fib of the whole move down. The 200 period moving average on the 4-hour chart is another reason why I'm thinking this will be a strong resistance level. And we've got a trend line, which is on my 4-hour chart. I'm not going to show you that right now. So this is a key area. Again, we're holding the resistance area, but is it a case of we hold the resistance area like we have done before? We did hold the 50% resistance area, which coincided with the 500-hour moving average, but we just paused. There wasn't really any profit potential on the shorts. So you never know whether we're going to pause and then break or pause and then reverse. Well, in this case, we broke higher and we've come to the next resistance level. So this is key for today, around 19,600. Probably worth trying a short position, but I'm also going to have that strategy of buying on a break above the resistance levels. We've got the sell level here and we've got the buy on a break above 19,750. And if that does happen in the Nasdaq, I think we can go to 20,000 and 20,200 pretty quickly. Okay, I hope that clarifies my strategy for today. If you've got any questions, please contact me directly or put them in the comments box and I'll get back to you pretty quickly. If you're not a subscriber and you're a follower, you're probably watching this over the weekend. I hope you find this helpful. If you're interested in a subscription, I'll put a link below. Please do reach out to me with your questions and comments, and don't forget to like, share, and subscribe to the video. Thanks a lot.